let's talk about the net profit analysis report. Now this is the most used report in the software at this point. And one of the reasons for that is because every time I make a change in the software to my model, I can come right back here and find out, did it help me or did it hurt me? Let's kind of take a look around and see what's in there. First thing you'll notice is each of the departments that you have set up will show up in the top banner at the top. Now, whichever department is highlighted is the one that you're going to see information for down below. The breakdown that's there, we've got a department name. For each department, you can see what the calculation method is currently set for in there. So in my service department, I'm set for a current hourly rate of $116 per hour. In my replacement department, I'm set for a desired net profit percentage of 15%. And the software will then calculate and find out if we're set to an hourly rate, then what's that going to give me for a net profit? Or, and then as a result, what's my cash flow look like? If I set it to a desired net profit, it will tell me what I need to charge per hour to enable me to hit that net profit and give me that hourly rate. Now, the other item that's in here is in the upper right-hand corner of this screen. This is the only area of this report that deals with the entire company as a whole. Everything else deals with an individual department. So based on everything you've got set into the software today, we're projecting what your gross revenues will be for the next year. In this case, $1.7 million. Now, that number is not magic, right? It's relatively easy to calculate that. It's your total billable hours in each department times your labor rate in that department, plus your materials, your markup, and your subs. That's what's going into that number. So if this number is too high, that's an indication that, quite frankly, you don't have enough lost hours in your model. Again, the math isn't rocket science. So if the number's too high, chances are you have a lot more lost hours than you actually have entered in. Go back to your individual labor for your direct labor for that department and increase the lost hours. If it's too low, then I'd be looking at adding more billable hours, decrease your lost hours for each of your employees. Underneath that, what's the net income in dollars that you're showing for the company right now? And below that, your net profit percentage for the company as a whole. The last item that's down here is the break-even date. That's the date that we're projecting you will have billed out enough total expenses, right? You'll have done enough business to cover 100% of your fixed operating expenses for the entire year, right? So in our particular case, that's November 25th, right? So everything I do up until November 25th is covering all of my fixed overhead expenses for the year 2021. After that, I can actually start earning a profit. Now, a couple of the other items on here. I'm going to start out just looking at my service department. So that's the department that's highlighted at the top. As I scroll down in this department, I can see in the blue banner a couple of different items. Right? Number one, it is my service department. Next, based on what I entered in for my employees, I'm going to have 2,790 billable hours in this department. My materials are contributing $270,000 to offset overhead for this department itself. When I look at the other side, I'm currently set to an hourly rate of $116 per hour, and in the red bar is showing me my break-even rate. My current break-even rate, as we look at that, $70.80 is what we currently have. So that's what it costs me to run this department all in. That'll cover all of my expenses that are associated with this department. We'll cover basically all my trucks, my vehicles, the equipment replacement costs, the non-billable time. It's going to pay all the wages, including you as the owner. We just won't have anything left over. So then we get into the body of the report itself. And in the body of the report, I can see, number one, it's always going to flag the current hourly rate. Now, I said we're set to $116 per hour. At $116 per hour, if I do that and hit the billable hours that we're talking about, these 2,790 hours, I should see revenues of about $950,000. That'll give me net profit in this department of $126,000, which will result in a 13.27% net profit before taxes. And so it kind of gives me that breakdown as far as where we're at, what our costs are. And again, when we get to this side here, the highlighted on it, $45.20 per hour is profit out of every hour that we bill out. If I scroll down on that list a little farther, it will always show me at the bottom what my break-even rate is. Right? So again, my break-even rate is $70.80. If I am at that level, I'll do about $824,000 in revenue, just have zero profit across the board on that one. And then we always show you in a couple dollar increments, we go $10 up and $10 below that labor rate. So you can see the impact of raising your rate $1 or $2 or $3 per hour and what that will do not only to the revenues, but also the profits as well in your department. So if I'm looking to hit a 15% net profit, I could work this backwards, simply come up here, there's 15%. I would need to charge $123 an hour for those hours, and I will hit that 15% net profit. So I can use this report very simply in that way. Again, anytime it's whatever department we highlight at the top. If I hit installation department, the installation, I'm going to see all the parameters for that particular department down below based on the information that I entered in. So that's simply the easiest way to handle that. Now, the next item that I can do here is you'll notice that we have the modify method button here in the lower right portion of that department list. By clicking on that, you can modify these calculation methods that are currently used in this given report. So in my case, if I hit modify method, right, and we'll just kind of move out of the way here a little bit. Let's say I'm thinking about raising my rate to $125 per hour. I can simply make the change here, right? It's going to come back, it'll recalculate the report. And now when I scroll down, I can see that it now has my current rate listed at $125 an hour. I can see the revenue, right? And I can see, okay, that's going to increase my net profit to a 15.1% net profit before taxes. Now, I can do that not only on changing the rate, I can also change the calculation method. Let's say I wanted to actually use a desired net profit for this department. I want to enter in a specific net profit. It will tell me what I need to charge per hour to hit that particular number as well. Now, there's one other item that we want to take a look at on here, and that is, you'll notice that right down here on the box in the corner, right, we've got this modify or materials included icon, and it's checked. Again, your material markup is offsetting a part of your company overhead. Right? For your company, it doesn't matter where does that revenue come from, right? Because you have a certain amount of overhead that you need to cover each year. And so as I'm looking at that overhead, I can increase my labor rate, and if I do that, I could actually lower my markup. Or I could increase my material markup, and that would enable me to lower my labor rate. But I have to cover that overhead somehow, because until it's covered, I'm not going to start making money. And so we wanted to show you the impact that the materials markup is having in your department. In my particular case, I can see that materials are contributing $270,000 in markup to offset some of my overhead. And so if I go in there and simply uncheck that particular box, it's going to recalculate my numbers without the material markup. In fact, you see the material contribution here just dropped to 0. And so as I look at that, I can see that without materials, now look what happened to our numbers. I'm still set for $125 per hour. That's what I'm shooting for. But it's showing my break-even rate just went up to $127 an hour. In other words, without that material markup, I'm not even covering my cost. Right? And so again, if I do that without the material markup in there, right, at $125 an hour, I'll do $437,000 in total revenues. But you can see I'm actually going to be losing $6,200, which is a minus 1.43% net profit before taxes. So again, I can use this. It shows you the impact. So when that customer comes to you and says, hey, I bought these materials at a Home Depot, can you install them for me? You can come back in here, very quickly see if you're not providing materials, how that's going to impact your overall profitability. Because again, you've got that certain amount of dollars coming in. And again, remember, if you lower the material markup, right? If I lower the markup, I have to raise my labor rate. Well, if I don't have any materials because they're providing it, that labor rate has to go up quite a bit to make up that difference. So again, that's the impact of unchecking that materials box that's there. Again, if I recheck it, it'll recalculate my numbers accordingly. So again, use this report every time you make a change to something out in the software. This is the place to come back to find out what the impact was on your company. If you have any more questions in regard to the net profit analysis report, feel free to give us a call at Grandy & Associates.